Back, there's about 15 points cut on the Nifty, but it's a big rebound from the lows. There is news on IndusInd Bank, and this is quite an incredible story on IndusInd and what's happening on the HR side. Top executives now, IndusInd is confirming. We should have the flashback on in just a bit. But IndusInd, after saying that, some of its employees who were joining another firm and that they were still on the rolls, now is saying both Mr. Saxena and Mr. Damani, that is Shalabh Saxena and Ashish Damani, resigned as CEO and CFO at Bharat Finance on the 25th of November, and both of them have offered their assistance in ongoing transaction review of Bharat Financial. So this is new information which is coming in, and this is quite different as compared to what we saw IndusInd telling us earlier about 3 or 4 days back. We'll have Ritu perhaps join us with more perspective and context to this, because she's been following this pretty closely. But this is what is coming in on IndusInd at this point in time. More on this, as I said, in a bit. But let's talk about the other big story, which I think has got implications for markets around the world. Crude oil prices slipped 13% on Friday. They're up. They've rebounded a little bit. There is the OPEC Plus meeting, technical meetings which were scheduled on Tuesday. They've been pushed out to Thursday now. And there was an expectation that OPEC will basically put more oil into the market, some 400,000 barrels per month. And there is speculation that now with this new variant and consequently concerns around what it may do to economic activity, that may not happen. Extra oil may not come into the market. Let's talk about all of this. Virendra Chauhan is oil analyst and energy aspect. He's with us. Virendra, great to have you here. Thank you very much. Is the oil market fundamentally, as we stand right now, how tight is it? What is the level of distortion because of this news flow around the new variant? And what's your sense? Are we headed higher or are we headed lower?
Yeah, I mean, the fundamentals for the oil market remain very, very constructive. If you look at inventory levels around the world, they are firmly below where we were at this point in 2019. And so from that perspective, from a fundamental perspective, things are looking very, very strong. And we don't expect that to change significantly over the coming month, even with these concerns around the new strain of COVID. Where we are likely to see a change is around OPEC policy. So I think previously the expectation market was that we continue to see 0.4 million barrels per day of supply being added each month. Now, the volatility and uncertainty brought about by this latest virus strain could mean that they paused that. And so the implication for the market is, if you think what's happened over the last week or so, and India has released reserves from its SPR, the US has released reserves from its SPR and amongst a few other countries, then effectively the crude being gained from that SPR release is going to be offset by a pause in OPEC. So fundamentally, we do think that prices are going to strengthen from this point in. We think the move on Friday was an overreaction, 11, 12, 13% move. That's effectively what we saw in April 2020. And we do not believe we're going back to an April 2020 style lockdown.
Okay, so you believe, Virendra, that prices are going to strengthen in the crude market. I was just looking at the chart over the last 6 months. The high that crude reached, Brent that is, was about 86.5 in October of this year. Do you think that could be the top over the next 6 months, or do you see it surpass that level?
I think because of the uncertainties around inflation, the broader macro environment, the implication that has for consumer economies around India, we do think 86 is at the top. Of course, there's headlines around the potential return of Iran and various other factors, SPR releases, etc. But if you ask me where we're going to be trading by the end of the year, I think somewhere around $75 to $80 range is where we expect crude to be.
Virendra, good morning. What do you think the OPEC strategy is likely to be going forward?
I think they're going to remain tentative. They're going to remain cautious. And I think the other thing which the market is taking for granted, but is slowly digesting through at the moment, is they take 2019 levels of OPEC supply and assume that 2 to 3 years later, with no investment, no drilling to maintain spare capacity, that OPEC could, at the flick of a switch, return to where they were in 2019. We think that is an overestimation of how much supply OPEC can bring back. And by the second half of next year, we're going to remain at very, very critical levels as far as OPEC's spare capacity is concerned, and therefore means that we're likely to be in for a very volatile period if prices don't remain high and investment levels don't pick up.
Okay. You mentioned that you expect crude to be in the range of $75 to $80 by the end of this year. That's not too far away from where we're at currently. So are you trying to say that however this variant progresses, governments are not going to impose large lockdowns and hence demand will not be impacted in a big way? Is that the right assessment?
Yes. So I think what's happening at the moment is, various countries, whether it's Israel or various measures that are put in place in Europe, is just to ensure that the domestic economy keeps ticking over. So it's just a pause, digest the information, and then see where we go from there. I mean, our assessments on global jet fuel demand as a result of this latest outbreak is very, very limited, less than 100,000 barrels per day impact on global oil demand.
Okay, Virendra, just want to take stock of the market. Stay with us. We are down 10 points. I mean, the backdrop is so volatile. 17,000 plus, right? I mean, so this is quite something. The low was 16,782 as far as the cash market is concerned, and so many stocks moving all over the place at this point in time. But the texture has not really changed. Reliance is up 2.5%. 24.75. The day high is 24.98. So it's about 20 points off the high point. But it's up 2.6, and that's a big part of the sort of reason why the market has picked up so substantially. Indocent is up about 2% or so. The day high is 938. It's at about 918, 919 right now. I think it slipped after that news flow that we flashed at the bottom of the screen. And steel is another space which got completely smashed. I mean, 6, 7, 8% falls on Friday. Tata Steel, for example, is coming up on my screen. It's up about 1% or so at this stage. Sonia, anything else?
Oh, absolutely. I mean, there is a big recovery underway. There's no two ways about that. Also, a lot of these, pharmaceutical stocks are picking up quite a bit of pace right now. And I mean, as you mentioned, metals, Nalco is up, Hindalco is up, SAIL is up, all about 1 to 2% odd. So, Virendra, just leave us with some views. I mean, you did talk about $75 to $80 by the end of this year. What could the downside be to crude, and what are the big triggers that you'd watch out for over the next couple of months?
Yeah, I think I already mentioned that any kind of diplomatic or political progress in Iran could potentially mean 1.5 to 2 million barrels per day of extra supply from there. But if you look at the other dynamic which has played out over pretty much the last decade, that is US shale production, the noises, the stories, the investment strategies coming out of there is they are no longer pursuing production growth. They're focused on delivering returns to shareholders, even in a $75 to $80 oil price environment. And so there's limited upside from the US, potentially some political progress on Iran, and that's why we remain around the $75 to $80 Brent forecast for the foreseeable future.
We'll leave it there today. Thanks a lot for joining us. That's the word on